Hi, this is Michael. We're continuing our NinjaTrader Unplugged video series. We're trying to take indicators that come with the NinjaTrader platform standard. We're not adding any third-party information to here, just what comes naked in the platform when you first download it for free. And the template today that I'm including in our download section is focused on spotting a very common phenomenon. This is one of the first setups that I was taught when I started learning how to trade, and it was as useful now as it is then. When you apply this template to the chart, we're putting a few things together on here. Number one, we're adding a MACD. That's a moving average convergence divergence indicator, and you'll see I haven't really changed the settings all that much. We've also applied a standard zigzag indicator. Zigzag indicators are useful in helping us identify market structure, higher highs and higher lows and whatnot, double tops, simply by drawing a line connecting previous swing highs and lows. Now I've got the deviation value in our template set to 2. It's a little higher than the normal value. I think it's 0.5. But you can see the effect of changing the number to make it higher, giving us larger swings to examine and analyze. Changing the number to make it lower gives us smaller swings and smaller legs to move with and work with. So one of those indicators you can see an immediate change with when you change that value. And then finally, that indicator that we give away for free in our download section that you'll have the link to available at the end of this video, we've got it set to a 120 EMA. And when the market is sloping down and the trend is down, the dots in the EMA will be black. And when the market is trending up and the slope is up, we're going to have gold dots. And I just picked those colors because I like them. Maybe it's a bulldozer dump truck thing. Not sure. Anyway, the concept of divergence is a really powerful one, especially if you apply it, in this case, to a range bar. And you'll see I have the E-mini S&P set to a range bar. You can, again, experiment with these values when you download the templates to your computer. And we've got two types of divergence. Divergence is a way of forecasting or signaling a market reversal by analyzing price action relative to an oscillator. So there's two types of divergence, bullish and bearish, and then inside of bullish and bearish divergence we have hidden and real. Real is probably the one most of us are taught and the easiest one to see. If the market is putting in a lower low and the MACD has a higher low, we have an understanding that the market may stop and turn and reverse here. And you can see that it stops at 1779 and goes up to 1782.50. So it went up 3.5 points as a result of this divergent turn. So that's pretty common. You see a lower low and then the MACD has a higher low. Let's look for an example of divergence, real divergence at a high. Here's an example of real divergence at a high. We have a higher high and then our oscillator drops down. So here we've got the market putting in a higher high from 1788 quarter to 1789.50. But the MACD doesn't follow. It shows almost a lack of energy in the move. That little train that could, can't. And I think I can, I think I can, I think I can, for traders becomes an opportunity to short the market. Let's take a look at hidden divergence because it's a little more complicated, but when you master it, remember, we're big fans of trend trading. You'll see that this is an even more powerful example of divergence. As the market trends lower and puts in a lower high, if we see a higher MACD value at that high, that's hidden divergence, and we're expecting a trend continuation move. If the market puts in a higher high at a lower price structure high, that's another example of hidden divergence to the downside. And again, we expect the market to continue to trend lower. So you can see how that becomes a powerful combination just using that one momentum indicator to look for trend re-entries. So what does that look like to the upside? Okay, so here's an example of bullish hidden divergence. We have a higher high and we have a lower MACD low. That's an example of an opportunity to look for trend continuation to the upside. So take a look again. Higher high on these lows, higher low, lower low on the MACD. Very powerful technique. When we look at them over and over again, you'll be able to see them and spot them easier. So take a look at this chart, download the template, put it on your market, your time frame. Try to use range bars if you can. You'll be able to see these things a lot easier if you do, but you can see it on minute bars as well. And if you want to download these templates and these free indicators to your computer, simply go to backtothefuturetrading.com/unplugged. There you'll have a link where you can download all of the templates created in this series, as well as the free indicators that we include there. Thanks again for watching, and take care.